Ladies and gentlemen, welcome back to a potentially crazy week for AMC stock. And why is that? Well, we had a beautiful last week. The data is setting up right. The options are setting up for another short squeeze. So many positive things going on. But then you have GME earnings on Wednesday, guys. So we're going to look at GameStop as well here in this video, how GameStop earnings could feed into how other meme stocks, quote unquote, meme stocks, actually trade for the week. We also will have a couple points of economic data which could move the markets a little bit, and that is something I think is deserving to mention here in this video, guys. Nonetheless, you guys know the deal. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, and if you guys want to come trade with me live in real time as well, link down below in the description of this video. So first and foremost, let's start with the earnings picture, guys. And a lot of these companies you might have heard about, right? You probably know these companies, but they're not a lot of companies that are going to move the markets, at least until Thursday. So Tuesday pre-market, you have AutoZone, and that's basically it. Dave & Buster's Tuesday after hours, Smith & Wesson, and then Stitch Fix, that's Tuesday and after hours. Wednesday pre-market, you have Campbell's and Ollie. Wednesday and after hours, you have GameStop, C3AI, and that is basically it. And then on Thursday, this is where you could get some broad market movers that could move the broad markets based off of their numbers. And it is going to be Costco, Lululemon, DocuSign, Broadcom, and Chewy. Obviously, Costco is going to be the most important one, but I think DocuSign and Broadcom, as well as Lululemon, could move certain sectors in which, you know, their competitors are in, right? DocuSign, you want to watch those technology kind of trades, those software kind of trades. Lululemon, that is going to be apparel companies. Broadcom, well, your communication kind of stocks, right? So those could be important. Costco, depending on what their number is, that's going to really give you the health of the consumer, and I think that will be big on Thursday because we don't have that much economic data. We do have some, but I think Costco might be a big window into the consumers on Thursday, and that's what the markets are going to care about, guys. So there is that. Those are going to be the earnings. If we take a look at GME and AMC, first we'll start off with AMC. And the Ortex data is giving us a 20.81% estimate of short interest, 107.28 million shares that are sold short, cost to borrow average of 38.68%, cost to borrow max of about 55%, and cost to borrow minimum of about 6.5%. Live cost to borrow numbers on Friday, we're looking like about 32.5% for a majority of the day. So those numbers are still very, very high. Days to cover sitting at 6.81 and 100% share utilization. Free flow out on loan sitting at about 34.5%, guys. So all of these numbers are looking very, very bullish. If we take a look at the option activity as well, it has been a very bullish story over the past week. 170 orders totaling $34.5 million. Positive order value of 57%. So we talked about this in, I believe it was the last video, how hedge funds are positioning their portfolios for a very bullish rally in AMC. A lot of those June 2023 options being purchased for those $7 to $9 calls. Well, even $11 calls, right? Considerably out the money. Would be expecting about a 50% move to the upside. And hedge funds, they don't like to throw, money around to not make money. If they're putting that much money into these options that are 50% out the money, they need to see a big move, and they are betting that we will see that big move. So if you're one to look at how hedge funds are positioning their portfolios, it's very much to the bullish side for the next couple of months. Same story with GME as well. Hedge funds have been betting very bullishly on GameStop, but there's a couple things that are a little bit different between GameStop and AMC. And the first thing is you have a lot less dollars going into GME options. Typically that's the case. You tend to see more options placed on AMC just because the market cap is higher and the amount of shares is higher. There's a lot of different factors that play into it, but For GameStop, you're still seeing a very positive order value. For the last week, 33 orders totaling $2.8 million with a positive order value of 58%. On Friday, the positive order value was 75%. 8 orders worth about $500,000. So looking pretty bullish for option activity as far as hedge funds are concerned, and the short interest is relatively the same as AMC as well, sitting at about 21.5%, about 54.5 million shares that are sold short. But the thing that stands out the most between GME and AMC is the cost to borrow numbers. The cost to borrow average on GameStop is 9.76%, cost to borrow max of 12.5%, and cost to borrow minimum of less than 1%. The numbers certainly look a lot better for AMC, and we're going to look at the charts for both of these here in just a second, but I do want to go over a couple key data points that will be happening this week, as well as some numbers that are coming out from China that are wild, guys. So it says manufacturing orders from China down 40% in unrelenting demand collapse. U.S. manufacturing orders in China are down 40% in what a logistics manager described to CNBC as an unrelenting demand collapse. Asia-based shipping firm HLS recently told clients it is a very bad time for the shipping industry. China to U.S. container volume was down 21% between August and November. Chinese factories are shutting down 2 weeks earlier than usual ahead of Chinese New Year. So, you know, why is this important? Because on one hand, if manufacturing is down 40%, it's probably not just COVID zero that's causing it. The Chinese COVID policy of just factories shutting down and less activity overall, it's probably that mixed with demand actually slowing down. If people are not buying as many things, you don't really need to manufacture as many things, right? So I think this could actually weigh pretty heavily on the markets starting tomorrow. We'll have to wait and see what futures come out as, because I think you will get that reaction with the futures. Nonetheless, guys, as far as economic data for this week, we're going to start on Monday at 2 o'clock with the ISM non-manufacturing PMI. This is kind of the producer side of manufacturing, and why is that so important is, well, the markets want to know how the consumer is doing. The markets want to know when a recession is going to happen, and if producers are producing less goods, well, that will be a problem and a clear sign of how the consumer is spending their money. Now, on Tuesday, you will have the balance of trade for October coming out at about 12:30 p.m. I don't think this will be too important. It usually doesn't move the markets. You can see we lose about $73 billion a month on trade. That's about our trade deficit. So it's not a huge deal. Markets don't care about the government. After all, they'll just print money if they have to, right? Not a big deal. Now, on what is this, Wednesday, you're not going to get any U.S. economic data, but you will get the Bank of Canada interest rate decision. Now, last time the Bank of Canada met, they were supposed to do a large rate hike. I believe it was 75, and they came out and did a very small rate hike. I believe it was 25 basis points. It's been a while, guys, so don't quote me on that. But they were supposed to do a big rate hike, and they did a very small one, essentially offsetting the market's expectations in a big way. Now, the consensus view is for a 50 basis point rate hike coming tomorrow or on Wednesday from the Bank of Canada. And just depending on what they do, it's our closest trading partner. It can have a lot of implications to what our Fed might do as well. So markets, they do pay attention to Canada and what Canada is doing with their central bank. On Thursday, you don't have too much besides initial jobless claims for December 3rd. Don't really expect that to be a big deal unless these numbers come in just really high for whatever reason, which it could, right? If those numbers start to come in high, it might be seen as a very positive thing for the markets. But on Friday, that's where you have a lot of the economic data. You have PPI month over month for November, and this is the producer side of inflation. So that will be important, just like the ISM manufacturing data will be on Tuesday as well. And that will come out at 12:30 p.m. And then at 2 p.m., you have the Michigan Consumer Sentiment Survey, the preliminary survey for December. And yes, this will be huge because they always are. This is no speculation. The Consumer Sentiment Survey is one of the longest running surveys and tends to be the most accurate survey to what is to come in the future, at least from consumers and the markets. They care to the utmost extent of what consumers are doing, thinking, or feeling. Now, if you take a look at the chart of GameStop, it looks very muted compared to AMC. We are above the 50-day moving average. So, I mean, that's a positive thing, but we're not testing or breaking out above the 100 or 200-day moving averages. If we get good earnings, you're probably coming up to these moving averages. If not, you could go higher than that. That is always a possibility, especially with very volatile stocks. But you know, typically it has paid to be long on GameStop above the 50-day moving average, but it is paid out a lot better to be long on AMC above the 50-day moving average. So I think you're going to see a good reaction in GME and AMC, but just, you know, dollar for dollar, percentage for percentage, chart for chart, AMC does look like the clear winner. I feel bad for all you single parents out there. I'm a single dad, and it is tough. So yeah. Yeah. But nonetheless, guys, on AMC, you are above the 50-day moving average. You have tested the 100 and the 200-day moving averages, both over the past 2 days now. And the fact that what we seen on Friday is you kind of tested the 100-day, you came down, and then you kind of tested it again, and then you fell down some more, and then you kind of bounced back up to that midpoint on the day to close the day unchanged and to be down 0.86% in after hours. I think that is showing a lot more positive strength than what GME is. So I think if GME has good earnings, AMC might actually react a little bit better. And believe it or not, if GME has bad earnings, I think AMC could also react very positively. And we are going to discuss all of this and much more, go over actual price predictions for AMC and GME in the next video. And holy moly, that is it, guys. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Most importantly, enjoy the rest of your day, and I will see you in the next one.